Alright guys, in this video I want to keep everything 100 and on the level with you guys. Everybody that's trading, everybody that's thinking about trading, everybody that's following the J. Lewis trading community, so on and so forth. I want to talk about just losses. So this week, these are just losses, and some of these trades come from last week as well. But the entire premise of this video is only to talk about my losing trades that didn't work out. I'm going to start with Lucid. So this particular stock I traded 3 times, and only one of the 3 trades that I put on was successful. So I'm going to bypass the successful trade, which was right through here, and I'm just going to talk about the 2 trades that I put on where I got caught. The first one is going to be right through here. So one of the big things that I'm always looking for what I do in my trading program is that I look for gappers to the downside, primarily a short trader. And what you can see right through here is that we had this big negative push overnight into the open, and we had this nice big gap down right through here. 200-day simple moving average overhead, VWAP, price action, again, dropping. It looked like we were going to produce a negative 3-bar play, which would take us to the downside. And what you'll see through here is we have this positive green bar that's then completely engulfed by this bearish red candle right through here on volume, and lots of it. Okay, so this one push right through here represents close to 5 million shares crossing the tape in a 5-minute time span. We didn't get the confirmation that I was looking for. We touched this lower level at 38, came back in the range, and then essentially what happened here was this area right through here, the opening range, faded. And when I say it faded, it went long and stepped up into what I think is almost it's a full gap fill, more or less. And so that was one of the trades that I took a loss on. So this entire squeeze right through here, it didn't fade me. The bottom line is, every single options position I go into, I use an asset allocation model, and the asset allocation model that I'm going into the trade with is defined as max risk. So only one of 2 things is going to happen with my positions. I'm either going to see a plus 100% return, making it a 1-to-1 trade, or I'm going to be looking at a loss of the entire position. I can go into detail in this in another video, and maybe even in Ask a Trader, but all of these positions that go against me are at max loss, which I'm totally comfortable with. Okay, so you can see that Lucid trades and blah 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 blah. We get short here eventually, and there was a reason why we got short there. And then this brings us to the most recent trade, which is this move right through here. So you're seeing that I'm getting the same setup and the same feedback that I need. Okay, 200-day VWAP, gap down, everything's there. Nice big negative bar. Price action prints to the downside. We get that confirmation, and then from there we consolidate, and boom, we squeeze. Now this one I had 0 chance of recovering on. There was absolutely nothing I could do to save this trade. This is on Friday. The options that I was carrying were expiring, pardon me. And so there was nothing I could do here. Even after the gap fill, there just wasn't enough time on the day, and I didn't have enough days in front of me to potentially see this thing roll over and take down these lower levels. Now, what is Lucid going to do moving forward? I have no clue. I don't care. Unless it comes up on my scan, I won't touch it. Bottom line is that it's overextended. There's a bit of a head and shoulders pattern on the daily over that 200. So I don't know what's going to happen here. Maybe we'll get short at some time, but that's neither here nor there. Point is, Lucid, 3 trades, 2 failed. Okay, just wanted to report that. Another big one was TGLS. This is a glass company that is listed in the States. The company itself is based out of Colombia. There was some negative news about the CEO and the COO both being related to some unsavory group that's based out of Colombia. And all of their business is done stateside in Florida for the most part, where they sell materials to companies that are building condos and whatnot and homes. And there was some negative news on this one, and price action moved to the downside. Now, it's important to understand that this stock, prior to this massive gap down, I think over the last little while is up somewhere between 250 to 300%. So if we actually just look at this year to date alone, this stock is up 375%. 375% year to date. What a beautiful investment this would have been. Coulda, woulda, shoulda. But what I was looking at here was the gap down. And the gap down, again, never know how these things are going to work out. It's a very, very simple strategy. I have a scanner, I look for these things, and as long as my holistic pattern is shown, I get short, and I wasn't wrong on the entry, but I was wrong on the carry and the follow through. And the bottom line is that the market, I guess, wasn't too spooked by the news. You can see that we double topped right through here. I thought, okay, well, it's holding this short-term range. Maybe it can come back to me. It absolutely did. It came back to this low right through here, and that little sort of head and shoulders pattern right through here, it failed. You don't see that every day, but this thing faded my my thesis, and you can see that we ended up creating a massive ascending triangle, and as soon as it squeezed past 23.15, the trade was done. I had no more time on this. This position as well was optionable, and it expired worthless. So the entire amount of capital that I put to work to short TGLS faded to nothing. So there's that as well. Now the other one is CGC, and I wanted to save this one for last because I made some fantastic errors that I want to be completely open with and transparent about. And it's going to start right through this area right through here. So what we're going to do is we're going to look at this gap down. Now this is Wednesday. Today's Saturday, and this is something that I was looking at on Wednesday and trading on Wednesday. Now, one of the mistakes that I made on this particular Wednesday is that I actually traded and positioned in and got in front of a heavy news day. So the Fed was talking, and it's always best to sort of let the Fed talk, let news hit the wire, and then trade around it or after it and see what the market is doing and saying with that news. I decided to be an asshole and trade in front of it. So here's what I did. Pattern, boom, boom, boom. 3-bar play, very, very nice. I used my profit taking target, which gave me a level of right here, which I hit, okay? Now price action hit the profit target taking level. Did I take the position off? No, I didn't, because I was looking at the long-term trend, and my idea was that, well, it's going to move lower. There's more room to the downside. So I didn't sell here. Price action rallied. As it was rallying, I was second guessing my thought process, saying maybe you should just target out. Price action comes back down to that 871 level, take it off. It came back down again and again. Did I take the position off? Absolutely not. What happens? News hits, it's positive-ish. Market didn't have a problem with it. Price action squeezed. So I'm in this WTF moment, as in, why the fuck didn't I sell down here when I should have? That was the plan, that was the goal. I achieved the goal and didn't follow the plan, so I deserve to get squeezed. What I did see up through here was a very, very classic clean head and shoulders pattern, and the idea was, okay, well, the market's done now. After some news, there's often a lot of exuberance in the market, and once that exuberance fades, price action will get back down to doing business and do what it's been doing, and it's been short. CGC is something that I've been shorting from the 50s, from about a year and a half, 2 years ago, maybe even longer, maybe 3 years ago. I've been fading it over and over and over and over and over again, from the 50s down to the 9s. When it hit the 9s, I was talking to the team about getting long at 9. From 9, it went back up into the 50s, and then from the 50s, we shorted it all the way back down to where it is. So this has been a beautiful long-short trade over the last few years that I have been in and out, in and out, in and out with. If you've been following me for the last couple years, you know that I've got this nice relationship with CGC, both long and short. So with that said, head and shoulders pattern, thought this was going to fade. It faded, and look where it faded to, a level of structure, which is where it broke out, tested. We came back down. You can actually see that there's a larger complex head and shoulders, that failed as well. It failed to break down. We retested, and then from there, we rallied. Now, here's the thing. In this head and shoulders area, I thought to myself, this is where the market's going to roll over. Every time it's breached the 200-day simple moving average on the 5-minute chart with the prevailing downwards trend, it always collapses hard, and it always has some really nice downwards movement. You can see right through here that we breach that 200, and then we sell from the 12s into the 10s. We get above that 200, and we sell from the 10s into the 8s. So the idea was, and if you look at the overall daily trend, it's dog shit as well. So the idea here was that, okay, well, it's probably going to do the same thing. So says history. If it repeats itself, I'm going to hold. And by holding, I held in the negative position, but then I averaged my cost basis down. Number one rule, and I broke it. Only losers add to losers, okay? This is a Paul Tudor Jones quote, and essentially what he's saying is that only a losing trader will add to a losing position. But what I did do is I doubled down on my position. I averaged my cost basis down by more than half because of this particular squeeze. And then I thought, okay, well, if this thing does fade the way that my thesis is projecting it to, then this will be a massive trade. And it faded, and the most aggravating part of this trade was this day right through here. So this is yesterday's open. Pre-market, it was down, I think 3%. It was below where my puts were. I had $9 puts. This thing traded into the high 890 level. And then for some reason, this thing just went on complete and absolute rally mode. This is a really, really strong and aggressive trajectory. The price action is on. It didn't break, it actually held, it then moved sideways. But now what we're getting through here is this head and shoulders pattern, and potentially there's a move to come to the downside in the future. But right through here, this is an area where I got faked out pretty hard because we were below the 200, we were below the VWAP, but the challenge here is that I didn't get a big aggressive gap down, which is what I should have traded. And the fact of the matter is, up here when I had this smart ass idea that I was going to double down on the position, it was a complete error. I typically 9 times out of 10 don't do that, but because of my relationship with CGC, I kind of opened up my risk parameters, and I was wrong. And this is the thing about discipline, is if you open up your risk parameters, you are opening yourself up to unnecessary, you could get hurt bad, is what I'm trying to say. So I just wouldn't do that. Have your risk parameters fixed, don't step out of them. If you're outside of them a little bit, work your guidelines and your positions into a position where you are within the risk parameters. For example, if I'm buying 200 contracts on a position and the 200 contracts puts me outside of my risk parameters by 5 or 10%, I will scale into 198 contracts, okay, just so I can be within my risk parameters. I would rather be in my risk parameters by 5 or 10% versus being out of my risk parameters by 5 or 10%. I hope that makes sense. Anyway, so this is a video geared towards losses this week. Bottom line is that even with these losses on CGC, with doubling down, with my loss on Lucid, two out of 3 trades that I put on, with my loss on T-Glass, TGLS, bottom line is the account on the week is still up. Well, I guess week and a half. It's still up 39%. So did okay, looking to move forward. And I just wanted to offer you guys some transparency on these trades. Every single trade that I've talked about today, I've talked about in chat, in the moment, while these things are happening. I've communicated to my team all of the losses that I've been taking. I post all of the charts before I get in, while I'm in, and then what happens after I'm in those trades. So this is, with my team anyways, well-documented stuff. If you have any questions, Julian at jlewistrading.com. Hope some of this helped. If you have any questions, reach out.